This is the Southside School of Financial Freedom Watch List and Market Report for the week ending June 5th, 2021. Our question this week is, what are meme stocks? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 0.52% on Friday and was up 0.66% for the week. The S&P 500 increased 0.88% on Friday and was up 0.61% for the week. The Nasdaq increased 1.47% on Friday and was up 0.48% for the week. Looking at the week, we can see that there were 7 up finishes versus 5 down finishes for the major indexes. On Monday, the market was closed. On Tuesday, the Dow Jones Industrial Average finished up, while the S&P 500 and the Nasdaq finished down. On Wednesday and Friday, the 3 major indexes finished up. On Thursday, they all finished down. The new unemployment claims were 385,000 versus 393,000 expected. Job creation accelerated in May, but still fell short of expectations. The 10-year Treasury yield fell after the jobs report. U.S. productivity growth rate was revised to 5.4% for the first quarter. President Biden rejected the GOP's infrastructure offer. Treasury Secretary Janet Yellen and China's Vice Premier met and talked about cooperation and economic recovery. And Cleveland Fed President Loretta Mester said that while the May's job report was solid, more progress is needed, varying that Fed policy would remain the same. New unemployment claims, job creations, the 10-year Treasury yield changes, U.S. productivity growth rates, infrastructure deals between the President and Congress, talks between U.S. and Chinese officials, and the Federal Reserve President's statements on job growth and Fed policy are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and the Congress. These 5 entities will do what they must to drive the market higher. Notice how the market rose when Cleveland Fed President Mester stated that Fed policy would remain the same despite the solid jobs growth report. Now we are at our question of the week. What are meme stocks? Meme stocks are stocks that have risen in price based on retail traders bidding up the stock's price based on news on social media platforms that retail traders are crowding into the stocks. These stocks may be fundamentally weak based on traditional metrics. Do you trade meme stocks? Do you own any stocks at all? If not, why not? Are you afraid that the market may fall again? The market will fall again. However, the market is trading near all-time highs right now. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list for the week ending June 5th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Tilray Incorporated, ticker symbol TLRY. It's in the second column. It increased 12.78% for the week, but it was down 4.67% on Friday. Tilray Incorporated is a marijuana company. They engage in research, cultivation, production, and distribution of medical cannabis and cannabinoids. The company also offers cannabis, lifestyle, and consumer packaged goods, and hemp based foods and alcoholic beverages. Looking at a summary of results, you can see that Tilray has increased almost 128% year to date. I generated cash flow from Tilray this week, and I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 8.13% versus 13.03% up for SPY, a difference of 21.16%. The Southside is losing to SPY by just over 21%. The Southside portfolio is heavily invested in Bitcoin. The portfolio is 54.7% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 10.61% of the portfolio. Cash is 34.69%. The cash flow generated for this week was 0.39% of the portfolio account value. The account value changed by 1.71%. Meanwhile, the S&P 500 ETF SPY changed by 0.61% this week. I sold option contracts on two positions this week. There were two puts that ranged from $201.70 to $229.36. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the southsideschooloffinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.